So wildfires like the one in Malibu have also been fueling a home insurance crisis. Over the past few years, major insurance companies have dropped tens of thousands of policyholders, largely in fire-prone areas. And now the state's insurance commissioner is putting in new regulations that he says will help homeowners. But the measure has critics who tell Dahlin it will then have the opposite effect.
People want to know, will this new regulation make my insurance premium cheaper? The answer is no. Won't make your insurance cheaper, but some argue it'll make it easier to buy insurance. The Oakland Hills are scenic and peaceful, but insurance companies say what makes it beautiful is also what elevates the fire danger. Too many trees and vegetation.
How much is my premium going to be, and am I getting dumped? Yeah, sure, I worry about it all the time, especially because everybody around me is getting canceled.
Homeowner Catherine Johnson lives in a house that was rebuilt after the 1991 Oakland Hills fire.
It went up from $5,000 a year to $7,000 a year for my last payment period, and I'm just crossing my fingers that I'm not going to get canceled when the term expires. That's my biggest fear.
Many of her neighbors are on the FAIR plan, which is California's insurer of last resort. Insurance Commissioner Ricardo Lara announced on Friday his plan to allow companies to use catastrophe models and climate change to set higher rates got the approval. In exchange, companies promised to sell policies in areas with the greatest fire risks, areas like wine country, the Santa Cruz Mountains, and the Oakland Hills.
This is the first time in California that there's a requirement for insurance companies to write policies, and we're going to be enforcing that.
Michael Soller is the state's deputy insurance commissioner. He says the new regulation will require companies to try to cover 85% of homes in designated fire-prone zip codes. But critics say it's got too many loopholes.
The regulation allows insurance companies to use secret algorithms to raise rates unaccountably. Californians will be paying more but not have any greater access to coverage.
Carmen Balber with the consumer watchdog group says the insurance companies will make more money, but the crisis will remain.
What the insurance commissioner has done is fold to the insurance industry's blackmail.
We're focused on bringing solutions to Californians, bringing more policies into the market so that the FAIR plan isn't the only option for people. Consumer Watchdog is bringing cynicism.
Homeowners say they're desperate for change. This homeowner even thought about moving to a low fire risk area.
We expect that it will be canceled. We hope that maybe this new development will be otherwise.
Catherine says she's willing to try the new model if it can increase affordability and accessibility.
Hopefully it would attract some of the carriers that have made an exodus. Maybe they'll come back and we'll have a more competitive market.
State officials believe companies will use the catastrophe model starting around mid-2025. Again, prices won't be going down. Their hope is to stabilize the market and the insurance premium rates.
So the commissioner's office says the new regulation is part of a larger strategic plan to reform the insurance industry. They're still working on other parts of his sustainable insurance strategy.